Stock markets across Asia fell on Monday as investors prepared for a prolonged Gulf conflict, with surging oil prices raising fears of higher inflation and a possible global economic slowdown. Regional equities weakened as geopolitical risks intensified and energy costs climbed. Pakistan said it was preparing to host meaningful talks aimed at ending the conflict involving Iran, even as Tehran accused Washington of preparing a land assault amid a U.S. military buildup. A Financial Times report said U.S. President Donald Trump suggested Washington could seize Iran's Karg Island, a key oil export hub, while also indicating a ceasefire could come quickly. Yemen's Iran-aligned Houthis meanwhile launched their first attacks on Israel since the conflict began. Analysts warned Iran's control over the Strait of Hormuz and its ability to disrupt global energy flows could prolong the conflict. Disruptions around the strait have driven sharp increases in oil and commodity prices, threatening higher costs for food, fuel, and industrial goods worldwide. Japan's Nikkei fell 3.4%, South Korea's market dropped 3%, and MSCI's Asia-Pacific Index outside Japan declined 1.3%. European futures also pointed lower. Brent crude rose to $114.90 a barrel, bringing monthly gains to nearly 59%, while U.S. crude climbed to $101.39. Rising energy prices have forced investors to rethink interest rate expectations, with markets now pricing in modest tightening by the U.S. Federal Reserve instead of earlier rate cuts. Upcoming U.S. economic data and remarks from Federal Reserve officials are expected to guide market sentiment. Bond yields climbed during the month, while the U.S. dollar remains supported by market volatility and America's status as a net energy exporter. Gold prices were largely unchanged despite heightened uncertainty. With energy markets under strain and diplomatic efforts still uncertain, investors are bracing for continued volatility tied to the trajectory of the Gulf conflict.